Hey, welcome to the exchange. Let's take a look at some housing data real fast. So this is from the Redfin weekly housing market data. This is percent of active listings with price drops in all Redfin metro areas. As you can see here, this is the black line, 2022. I mean, this is massive spike. We're about to cross almost 4% of basically houses with discounting pricing. I mean, here are all the stories all the summer and the fall of like, hey, you know, they bid over 50,000 over asking, 100,000 over asking. Like these houses are selling for crazy premiums versus the asking price. That's changing right now. The market is softening quite a bit. We're starting to see some of those top end prices come down. I mean, this is only 4% of the market that's actually dropping prices, but we're seeing, hey, the trend though right now is showing, hey, this is growing as people are going forward, or they're saying they're asking prices much lower than they were versus 2021 or 2020, for example. But as you can see here, I mean, it's not crazy territory like we saw like, 2019, 2020, like later in the summer time frame. But again, it's heading that direction. So we'll see how bad it actually gets. So this is a great chart too. This is for a single family residential housing. It's basically the cost to have a mortgage versus the cost to rent a home. So as you can see here in the red, is the average mortgage payment itself. The blue is the average rental payment. So typically the mortgage payment should always be below the rental payment. So the idea there is if you're a property owner, you have a monthly mortgage, you rent out your house, for example, basically what it's saying right now, you can get $1,900 for it, whereas your actual mortgage payment right now is $1,788. And that gap there is not much. It's closing down pretty fast. So as you can see, the actual mortgage rate itself is spiking historically. But look at the actual rental income. I mean, it's increasing, but it's a very flat growth rate. Really, since last August, September timeframe, it's been a very flat growth rate. And the big fear is if these two cross, where all of a sudden the red line goes past the blue line, basically, I mean, people are underwater cash flow wise. And at that point, I mean, valuations have to come down because like long term sustainability, it's just not there for the market. So this is an interesting chart too. So you saw a discount, basically housing discount chart as discounts are actually spiking up real fast. This is showing you right here is actual listings themselves are actually low. We're actually below 2021 right now for norm. So you look at year over year, negative 17.94% basically for listings or listing volume itself, which is counterintuitive. So it shows me here is if listings were to spike, or if basically people were to like sell their homes, or like not distress sell, but to sell their homes because they want to get out of them at a high valuation potentially. I mean, we could see a massive downturn in the market or massive discounting as prices come down, especially as interest rates increase over time potentially too. So I'm not too worried as someone buying their house for primary residence, for example, because I mean, they're pretty high valuations and they know they're high valuations. So if it bleeds down a little bit, goes a little bit negative equity, I think that's totally fine. What really has me nervous though is actual institutional investors. So they've been a massive part of the market in the last 2 years, and they've been buying for two reasons. Number one, for appreciable assets, for asset growth values overall. Number two, though, is actually an inflation hedge. And what has me worried is if this summer an inflation hedge, basically the inflation story goes away a little bit, or at least the top end risk goes away, the question is, do they sell? And that's one question we don't know right now. Also, too, let's say look at the stock market right now. If it's a major crash or major, let's say they have margin calls or they have, way too much leverage, for example, do they sell at that point too to raise cash as well too? And that's a big question you have to ask yourself. Because if these investors, if they sell en masse, you're going to see these housing listings data basically spike up all of a sudden. You're also going to see the actual discount rates spike up as well too, and it can get very, very bad very, very fast as it basically feeds on itself. So the market is softening. Like I think a crash is unlikely. I think a bleed down like we're seeing right now, a little bit softening, what is more likely scenario through the summer and the fall potentially. But again, I mean, things could change very, very fast depending what investors do who own a lot of these homes across the U.S. right now. But yeah, I mean, be sure to comment, your thoughts down below, and that's the exchange.